What's going on, traders, and welcome to this week's episode of the Weekly Watchlist, where we have a special announcement. So in the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we always look at the same core companies. We've got Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. Recently, we have been doing some quickfire rounds at the end, and the Discord server has voted. These are the tickers we'll cover in this week's episode. If you want to be a part in voting, feel free to join the Discord. That link is in the description of this video, along with all of our other free resources. And we did mention that special announcement in the introduction of the video. Stay tuned until after we do the broad market analysis to see what we're up to. Now that the trading month of September has come to a close, let's look at the monthly time frames. Last time we did this, we talked about 5 consecutive higher closes in the S&P, especially with August's value being breakaway to the upside. We cautioned anyone with any new longs up around this area of the chart as it was setting up for poor trade location. If you heeded that caution, of course, there was a little bit of upside early on in September, but ultimately the pullback was there and you avoided it, if you were being careful. So anyways, what we can look at in terms of structure is our previous resistance is now acting as some sort of support, right? So previous resistance here, buyers stepped up and really bought that area as noted by our upper wick. We do have to acknowledge, though, the upper side, the upper wick, if you will, here into blue sky territories, which is completely normal as we head into uncharted territories, if you will. There's no price exploration up here yet, so the confidence is low. That's completely normal, nothing to be afraid of. Going forward, what can we look for, though? We have a high and a low completely engulfing the prior month's range, so a breakout over the highs could potentially set us up for a move higher. Of course, that would be bullish. A breakdown under the lows would be bearish, and we could see potential further correction. But the least talked about scenario, in my opinion, is the possibility for an inside bar, something that forms like this, which I think would be a beautiful and risk-friendly setup for a nice new monthly bull flag, something that could look like this, where we see consolidation, price acceptance up here at these higher levels. We have a clear entry over the highs or whatever structure that forms, and a clear stop loss underneath the lows of the structure as well on any sort of longer-term swing at least. On the weekly time frame, we're just going to quickly talk about structure and location as we always do. So structure, we actually have a bearish candle, right? An inverted hammer with an upper wick indicating some sellers hanging out. But in terms of location, where is it? It's actually breakaway value to the upside. So that's interesting that we have two conflicting pieces of information here. We'll have to look at the daily for more info. So just a quick tip for anyone on Thinkorswim, if you want to toggle quickly between a clean chart and a marked up chart, you can just create a new drawing set down here in the lower right hand corner, and that's just quickly how I go back and forth. It's actually quite nice to look at the longer time frames with not as much noise. Anyways, on the daily and for our levels, interesting setups, right? So we actually had a gap which we failed to acknowledge in the past two videos. Apologies for that, but there was a gap above which we did fill on the upper wick of Thursday. So that has been filled and repaired, and we are potentially setting up for a fill the gap above to fill the gap below setup, where the market's essentially just repairing structure that is currently, around where price is trading. So we filled the upper gap. Now we have a lower gap, that ultimately happened on Monday. We filled partially, but there is still some to be repaired below. So anything under 331.21 fills to 329.56, and anything under, which I don't think is a likely scenario, but I'll explain why in just a minute, we have targets below at the previous balanced lows at 321.88. They'll look below and fail, as well as prior support shelf, 319.50, and then 312.81 is where we'll stop for now. I don't think that this is the case for a number of reasons. First one being, if you remember in last week's video, we had a resistance trend line, something that looked like this. So we have now broken trend to the upside. We have a set of higher lows that have formed. We also have the potential for an inverted head and shoulders, something that would look like this. And now our new sort of neckline, if you will, is going to be that sort of resistance trend line. Anything above could set us up for a nice move higher. Also, the fact that we established value higher this week, as we talked about, those two conflicting pieces of information on the weekly time frame, looks bullish to me. I do have to acknowledge that we did get some rejection back, below our 50 SMA on the daily time frame. However, sometimes it takes a few days, a couple weeks even to resolve some of these major moving averages. Last thing I want to point out here is, of course, the news that came out on Friday in regard to the president anyways, and the fact that the market shrugged it off. So, regardless of political stance or anything like that, you have to at least consider that such a significant event really could have potentially turned into a nasty day in the market. However, what did it do? It gapped down, it filled the gap above, and actually closed green on the day. So you got to give the market some sort of credence there for showing some strength even when a significant event did happen. So because we didn't go lower, because we didn't fill this gap, which seemed like a likely scenario, that is why I think prices have established higher. The inverted head and shoulders is potentially in play. Just in terms of levels, look at what we have here. You can note them to the upside, but the most important one I want you to keep in mind is, of course, our pressure cooker top up at 342.50. Looking at the Q's monthly chart, I'm not going to spend as much time here, but all we can note is that, again, we had those 5 months of consecutive higher closes with almost breakaway range every single month. Now we've seen that significant pullback, and what's most interesting here is the candle that formed in September, at least, is more bullish than what we saw in SPY. And why is that? Of course, our upper wick is much smaller, and our lower wick is actually much larger. So it's almost like a hammer candle as opposed to more of a doji-esque type of candle. Again, on the weekly time frame, very similar to the SPY, we have conflicting pieces of info, so a bearish structure of candle. However, in terms of location, again, it is breakaway to the upside. Let's look at the daily for some levels. So again, just use that drawing set down here to pop the levels back on. And what you'll notice is, of course, we are retesting our balance area highs. We have a nastier candle here than what we saw in SPY. So the Qs actually printed a red inverted hammer with a significantly larger upper wick. And we did close below our daily 50 SMA. So if we break down below our 270, 270, expect a retest of our lows from this consolidation range, which again are at this 260, 262. I think, that could potentially be in play here as tech sort of cools off, if you will, while the broad market, the ES, the S&P, if you will, sort of takes the baton and moves higher. So, I'm not entirely saying that they have to move in sync, but if this one goes lower, I wouldn't be surprised just because of how hot it's really been and how overextended it has been on that monthly time frame. So a few more months or a month more of consolidation or pullback, if you will, would be completely healthy and fine. In terms of levels, so we talked about, down below at 260, 262, anything underneath that, and we have our next shelf here at 256.87, and then 246.50 is where we'll stop for now. We do have a new high in here that we have to contend with if the move is higher, so anything over our 280 quarter, and we could potentially set up for a test of 280, 266. Anything above that, you can see there's really just not much structure on these two significant selling days, and there's just the back test of our support trend line, as well as this level in here at 292.73. Same thing exists here in terms of the potential for an inverted head and shoulders. Basically, all I would ask that you watch is, does this level break? Or does this level break, right? So this would set up the bearish case where we break down below that level, the support trend line is breached, and we no longer have that higher low potentially in play, no longer have a new higher high potentially in play if we break out above. So that's ultimately going to be the key here. And with that inverted hammer, nasty red, nasty upper wick, and now below that 50 SMA, I'm sort of unsure. It looks a little more bearish to me here on the daily time frame than the SPY. And last but not least, checking in on Russell 2000 and our small caps. And what you'll notice here on the monthly time frame is that we're already sort of starting to form that monthly bull flag. What's nice about this too is we have confluence with this sort of downtrend line. It's not quite perfect and exact here, but you'll notice that we have lower highs, and we're starting to get into that area just now on the chart. So again, watch out for a breakout either above our set of highs in here, or a breakdown below our lows, or the potential for an inside bar here. In terms of our monthly bar, it's more like SPYs. However, our lower wick is more significant, and it's holding above our monthly 50 SMA, so bullish there. Weekly time frame, much more bullish than the rest of our two indexes as well, in the sense that we had a hammer candle and now a green full-bodied candle to the upside, with overlapping value, so meaning that we found acceptance here. There wasn't just a clean breakaway and gap left behind in the chart. Next thing I want you to pay attention to here, of course, is going to be this downtrend resistance line. If we can break out higher, potentially target somewhere in here, 160. On the this essentially is a new weekly bull flag, right? Something that looks like this. Boom, you get the breakout. You almost double that flagpole range there to the upside. So anything over that 160, and again, it almost lines up perfectly here to 170, our previous set of highs. One last time, we'll turn our daily levels on here. We'll zoom in a bit to talk a little bit more nuance, and we'll actually draw in that resistance trend line we were talking about on the weekly time frame. So that is something like this, where we go from highs to highs, and you'll notice on Friday we almost butted our heads right up into it. So anything above, we talked about a nice move up to 160. You have a little bit of an intermediate level there at our 158 level, so watch out for that on the breakout to the upside. I think that might be in store, especially given the fact that it had such a strong relative Friday compared to the rest of the market. So watch out for small caps to make a nice little comeback here. If we break down below our lows, though, at 149.11, we have levels marked out for us. This one doesn't really look like it's going to, it's providing some noise right now. So anything underneath that, look for a more significant move down to here at 145.50 and our 200 SMA, anything underneath 142 and then 139.18. If you've made it to this point in the video, then you know it's announcement time. We recently hit 5,000 subscribers on this channel, and I just want to say thank you to every single one of you guys. I really appreciate the people who have really been here since the very beginning. And in order to just show a little token of appreciation, I want to do a $50 giveaway to one lucky subscriber. So all you've got to do to enter is leave a random comment down below. And the reason I'm saying random is because I don't want someone to just watch the first 5 seconds and just leave an entry for the contest. So hopefully you've made it to this point. You're a legitimate viewer and you want to enter the contest. Maybe you've been here a while, maybe this is your first time. Regardless, leave a completely random comment down below. Again, like the video and make sure you're subscribed to the channel, and you will be entered for this $50 giveaway. The winner will be announced in next week's video. I'm going to move through these quickly so the video is not terribly long. We have an inverted hammer candle, which is pretty bearish, happening underneath our 50 SMA, but it's at a key juncture of support, which was then resistance and is now acting as support. So 112.32 is going to be the key early on in trading this upcoming week. We had a 3-day balance, something that looked like this. If we were going to see a breakout, Thursday should have been the day that sent the market higher, at least here in Apple, and that was not the case. So we have a little bit of a failed breakout, if you will. So I do think that the move wants to be lower. So of course, target that support trend line on a break of our 112.32. That's going to be right around 110 depending on time of the week. Anything lower than that, and we have a filling up the triangle pattern down to 106.23. Intermediate support here around, let's check that out, here 103.13 just about, and then the bottom of our earnings gap up candle is at $100.93. I did mention that we should see some chop in this area as people defend their earnings positions, which it looks like they have been for now, but anything underneath gap fills down to 96.31. Checking in on Netflix, this level doesn't really appear to be in play. It's just providing some noise, and what we have and are left with is more of a clean picture of where we stand. So right now seeing a pullback after a pretty impressive move to the upside. So is a daily bull flag going to be the formation and pattern that happens here? I'd say any consolidation that ultimately happens in this range, I know it's quite large, but any consolidation here would be healthy and potentially bullish here on Netflix. Anything over these highs at 521.60 and clean breakaway over our high from Thursday, which is at 529.05, could potentially set us up for a revisit of these levels in here at 548.72 and 557.42. To the downside, though, we have 50 SMA support coinciding with our 496.66. If it breaks, expect a nice little flush, in which case we're giving back much of this little run here, and the next key support is ultimately back down where it started at 467.07. Tesla, a little bit of a failed, breakout here. It looks like we tried to go higher out of this symmetrical triangle, really got no acceptance, and then on Friday ultimately went back down and traded back into range. So again, the key going into this week will be this level here at 408.10. If we can trade above it and maintain above it, then again, watch for some sideways chop and maybe another retest, trying to get back above our 455.72 level. To the downside, if it breaks, though, we have support trend line as well as 50 SMA, which will be rising and might be in play somewhere, anywhere around this 385, 85-ish area early on in the week. Obviously, that will adjust as time goes on. And next key support is going to be this zone in the chart down here. That's at 369.85 and 360.69 underneath. Our next key one is here, 355.08. Looking at BABA, we had a beautiful 2 days of consolidation on the break outside of our resistance trend line, so that hammer did result in the upward action we wanted, and now we're left with a gap in the chart. So the gap is annotated. Anything underneath our 283.76 fills down to 279.31. I don't necessarily think that's the case. What would be beautiful here on BABA is if we see what we call a peg setup. So it's not an earnings gap up, but just a gap up in general here. If we hold the gap up range, something like this, see some sideways consolidation, as soon as we retest those highs again and set a new high, it could potentially send us much higher as value is essentially being established higher. I know that's a lot of higher, but anyways, all-time high here is at 299. Look for a breakout over 300 if that is the case on any sort of strong move and a hold of this gap up, if the gap fills, we talked about 279.31. Underneath that, we have this key support as previous resistance there at 276.60, and then back here, this zone, as we talked about in last week's video, at 268 to 265.69. Facebook is interesting here, again, because of our candle structure and sort of location. We had a failed breakout above our 50 SMA, but as we mentioned, these things do sometimes take a few days to resolve. So we'll have to wait and see whether or not we get acceptance back above, but based on Friday's action, it looks like that's a no-go. A flush underneath our 259.28, which looks like a likely scenario, will put prices back down here, down around our 250 whole dollar. We have sort of a zone, if you will, with some lower lows right around 247.16, anything underneath that, and we have 238.07. To the upside, though, if this does hold up as support, we can battle back up through our 50 SMA and over our 265.17. Look for there's really some room to run. Of course, we have some new intermediate resistance at 268.21, but ultimately, up here around 275 could be a good potential target on Facebook on the upward swing. Next one would be at 278.97. NVIDIA is continuing to show extreme relative strength compared to the rest of tech for a number of reasons. We're still trading above our support trend line, the white dotted one, of course. We already got the breakout over our pressure cooker top early on, at the end of last week, and this week we've continued to go higher, and right now we're just seeing some pullback. So some correction to this nice little move in the upwards direction is completely A-okay. We can look at this as a daily bull flag as long as we sort of hold some of these levels in here around 523.50. We're in good shape. So of course the inverted hammer candle doesn't really bode well for that scenario. So if we do go lower, we're ultimately seeing a retest of our breakout level here at 504.76. If that holds, watch for support trend line to come into play as it sort of, as I would anticipate, goes sideways into that and then potentially a new swing up. But if it breaks, fill up the triangle until your heart's content. So next up below is at 481.71, 454.81, and then we'll just stop here at 432. Microsoft sort of chopping around that 50 SMA as well with the inverted hammer and, close below ultimately our significant support here at 208.02. I think the move wants to be continuation lower to next up, which is 202.16. Underneath that, we have our lows from in here at 196.28. To the upside, though, if we get some sort of miraculous turnaround here, let's say the market reverses and has a strong push, we will have to battle back up through this area of resistance, the 50 SMA. That's right around 210.50s, if you will. You can see there's a few upper wicks in this general area, so that should act pretty strong as resistance. Anything above, though, target will be 215.77, and you can see after that a little room to run all the way up to our next double bottom that was in here, 224.64. And last up on our core list of companies, we have Amazon, which is established value higher and is continuing to hold its weekly range, if you will. So right now, testing out the lows, right? If we do something like that, you can see it is testing those lows. If we break down underneath our 31.0509, look for potentially a flush. If these lows flush, there is a gap in there, so watch out for the gap fill that fills to the high of this candle, which is at 31.0154. So keep that in mind as a target. I'm not going to clutter up the chart now, but for your own reference, it is there. To the one thing I'm also noticing, nice support trend line here, actually. So if that breaks, again, that could coincide nicely with the gap fill and move lower, in which case the target will be down here at 29.2322. To the upside, if this trend line remains intact, we see a bounce, move back above our 50 SMA here on the daily and our 31.81 level. Look for resistance at 32.4594, so almost that next whole dollar, that 46, if you will. And then above that at 33.4350 and then 34.50. Jumping right into our quick fire round and keeping it quick. UPS is up first, and you can see that we have key support here at 166.50. Let's just round it off. Prior resistance has now turned into support once and twice. If we can hold on to that, then the potential for a breakout over the all-time high here at 171.98 is in store. Reason I say that is because we have a tight consolidation area that looks like this, and when you have balance, balance leads to excess, and that excess should be in the upside direction because we're in a nice strong uptrend here. If that's not the case, though, and we break back down into balance, always target the opposite end. So we have 156.79 just about as a target to the downside. 50 SMA will start to coincide with that level as well. DKNG, DraftKings, not much to update you on here. If you've been long, then congratulations. I would start to take some profits. Our anticipated target is going to be up here around 67.40, so I'd start taking some money off the table at 66. You want to pay yourself and not, see a nice green trade turn red, especially if you're trading options that are, near-term expiration. So pay yourself. We do have a nice green full-bodied candle showing extreme relative strength to the market there on Friday. So if you're long, stay long. If you're not long, do not chase it up around these levels. I would wait for a pullback. DDOG, Datadog, is a popular one as well in terms of up-and-coming companies, and we have new all-time highs at 108.20. That's a double top there. If we break out higher blue sky territories, right now we're testing a key support. It looks like in this general area of the chart at around $101, I'd call it. Probably just make a zone and call support at 100 as well, a nice psychological round number. So we'll mark that in. Right now we are contending with a nice bull flag, so the pattern looks something like this. Nice pull in the upwards direction. Consolidation would be beautiful to see in this area, and then a breakout higher over our all-time highs. If that's not the case and we break down though, next key support is really going to be somewhere in this general vicinity. We'll call it 93.30. That's because we have a breakout area here, right? Resistance, 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 and then we broke out higher, so that is the key level. Next up, FSLY, ticker symbol FSLY, and you'll see here that we actually have a beautiful little uptrend that's been in place for some time now. So we're going to draw that in. It's almost too good to not draw in if my clicker would work. So that's what that looks like, and right now we are contending with some of our highs in here. I do want to draw back now a horizontal resistance. So resistance at 99.81. I'd just call it $100 psychological round number. You can see there's a huge gap that's left unfilled in the chart that fills all the way up to our 107.56, the low of this red candle here. Anything above that, of course, all-time highs. But based on this nasty upper wick as well as tiny, tiny little body there, almost at our support trend line, if it breaks, expect a move down to our 50 SMA, the blue line there, or potentially this pullback area on the chart, which is at $86 just about. Ticker symbol plug, P-L-U-G, plug power. You can see we have all-time high resistance somewhere in this area around 14.35, just below it, probably 14.20, just to give yourself a little bit of a advanced heads up, if you will. And we're sort of forming a pressure cooker top there, so anything above could form a nice breakout. Generally, we're looking at doubling this first pullback range, so that is about a range of almost $4. So look for 18 on a significant breakout over this all-time high. If that doesn't happen and we see a rollover here, it looks like key support is going to be around this area, 12.75, based on some of our lows and consolidation in here. Underneath that, next up is going to be here at 11.17. 50 SMA is in between. So ticker symbol RKT, Rocket Companies, is a newer IPO. You can see there's not a whole lot of price data to contend with, no moving averages yet, but you can see two nice green days, especially showing relative strength compared to the market on Thursday, Friday. Key support and where we sort of bounced out of, just to keep a reference point, is here at 1986. If we could get a click. There we go. Next up as resistance, it looks like this area of the chart has acted in the past, so we'll note that at 24.50. You can see all these upper wicks. It really looked like an area in the chart where price struggled. So watch out for that as an upside target. Anything above, with new IPOs, anything can be possible. Next up target is there, 27.06. We'll just keep walking them up. That way we are aware and have the chart marked out. Boom, and then, oops, there we go. And support below, if we do break down, is going to be around here, 18.65. So NKLA, I'm sure, with all the news, I don't even want to get into it. Let's just look at price action. Right now we have two clean rejections off of that 200 SMA, the green line there, two beautiful upper wicks. So I would expect a move lower here in NKLA, actually, based on the dual inverted hammers. So targets below are going to be here, 1750, our little shelf that we've built. Anything underneath, and I don't know for sure. Yeah, this is really pre-run up and pre-popularity, if you will. So I'm not really entirely confident in picking out some levels back here, but let's just draw one in. I think that 1250-ish area makes sense as a pullback area from in here and should be support underneath, if you will. But in terms of an upside breakout, if we do get a move above our little double top and 200 SMA, of course that would be over 2637. There is a gap to fill on the chart to the upside. That fills at 32.77, but we do have to contend with an intermediate, the bottom of the gap, if you will, these set of highs in here at 29.57. Again, I just kind of stay away from this one with all the news, and it's unless you're trading shares, I don't really think it's something you should have on your watch list. Ticker symbol JD for JD.com. Looks like we did this quite a while ago, so these levels are no longer in play. We'll clear it up and talk about the only relevant areas in here. So key support is going to be in here right off the bat. Nice pullback area in there. Looks like we have resistance forming at 78.50. Anything above and potential for a all-time high retest is there. That's going to be at 86.50. You can see very emotional in here, maybe an intermediate level. I'd call 81.30 based on some of our topping in there. So watch out for that on any sort of breakout above based on our inverted hammer candle that's formed. We're still in a very strong uptrend. So the potential for chop is here given the, daily structure, but the overall trend is up. I'd watch out, for 72.56 as key support, especially with that 50 SMA coinciding. You can see, all the times it's come in contact, it has respected it as support. So I don't see why it wouldn't on this first touch. Workhorse we have talked about in a couple of these videos now, and you'll notice that almost all of our levels have been in play. So we went right to our key support at 22.82 on Friday after a clean rejection off of our 25.04 level. So what does that mean? If we break down below this level, our next up is going to be here. That's going to coincide with that 50 SMA. The blue line, as always, that's at 20.34. Watch out for that, especially with the inverted hammer structure. Anything underneath, and you can see, we really marked out 14.81 as next up, but there is a level, I'd call it here, that could be in play there, as well as these highs. We're sort of splitting hairs and getting really granular here, but all of these levels could potentially be a bounce if this breaks, as well as that 50 SMA. To the upside, though, targets are mapped out, and they have been responsive so far. And last but not least, we have PTON, and our support trend line, again, just like the other ticker we had, is quite clean and beautiful. Looks something like that. And on this one, we're actually trading above it right now. So buyable into the, any pullbacks into that area should be buyable on a first touch. But if it breaks, start to look out for some levels below. Let's map them out real quick. We have this area of the chart, which was previous resistance, should act as support on any sort of move back into it at 98.43. It looks like $100. Again, that psychological number has offered some resistance and then support above. So watch out for that to act as a zone more or less. Next up is key support below is going to be at that 88.33 based on some of our lows in here. And to the upside, we're sort of in blue sky territory. So anything over our 110.25, just monitor for continuation and look for whole and half dollar resistances as well as any intraday levels that do form. So that's going to be it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, again, leave a comment down below. If you want to be entered into the contest and the giveaway for $50, then leave a completely random comment. That way no one else knows and you have to watch, to be eligible for that. So again, leave a comment completely random, like the video, and subscribe. And with that, I wish you a green trading week.